Over to you, Jake.
Thank you very much. Now, Dan, you want me to start over from the beginning?
That'd be great. Thanks, Jake.
Okay, good. So thank you everyone for coming here today. You came to the right place for the right information, and the price was right. What we try to do here is to give you solid, workable trading information about seasonality and cycles and how to use them pragmatically. I'm not a theoretician. I'm not an economist. I am a trader and have been for many years. And if I'm beginning to sound like an old man, it's because I am an old man. But with the age comes knowledge and experience. And it's my goal to share that experience with you and show you how we can use cycles and seasonals pragmatically for the purpose of generating intelligent, workable, predictable, high probability investment and trading decisions. I also want to thank the members of the board and as well Dan Muse, who's going to be helping me with questions today. In addition to that, I want to thank all the other great contributors, Dr. Smith, who's the chairman of the foundation, Lars Von Tienen, who does outstanding cycles work, and all the others behind the scenes. My goal is to show you how we can use seasonals in terms of cycles pragmatically, and as I said before, intelligently in order to generate investment decisions that are profitable and consistent. It's amazing to me that so many people in this business don't want to use logical, solid information and facts. The more history that we have for seasonals and cycles, the better off we are. And yet there are some people in the trading business who only want to look at the last few instances of an event. Remember that trading is a process. It's not an event. It's a process from start to finish. The process that I have been showing you for the last few weeks is the process of finding seasonal trades, or in other words, these are trades and trading opportunities that occur within the course of a year. Trading within the course of a year or investing within the course of a year does not appeal to many traders. However, given the fact that most traders and investors are very impatient, the idea of trading within the year, for example, buying stocks around the 1st of April, getting out of stocks around the 17th of April, very much appeals to the time frame which most people are interested in trading and in using. And so I provide you with the information that will be consistent with this and show you the statistics. And here's the important thing. How does my work and how does the cyclical work differ from that approach that's used by so many other investors and traders? The difference is we look at history, we look at numbers. Many traders run away from history. They find a trading strategy. It seems to work in the moment. They go back and they look at it over the last 1 or 2 years, and it seems to work. But then they begin using it and it doesn't work. Why? Because they haven't gone back far enough into history. So we embrace history for what we do, whereas many investors reject history. Just from the standpoint of the beauty of consistency, when you see things working, it's an enjoyable experience, whether you make money or not, whether you're in the game to be profitable or not. The concept of seasonality and cyclical behavior is truly, in my view, one of the most consistent and best concepts that we have available to us as investors and traders. And so we're going to be looking at some of these today. In the last session, I started to create a list for you for the October seasonals. Why did I do that? Let's take a look. And by the way, I'm using a new annotation tool here today, so we may not be able to do this as smoothly as some people can, but I'm going to do my best. So as I showed you for the last session, this is a seasonal composite chart. We took every year of this index and we turned the high of the year into a 100, normalizing the data. We turned the low into 0 so that no 1 or 2 or 3 or 10 years could impact the trend. So what we've done is we've extracted the pure seasonal trend from this market, which is the S&P 100. And on a very big picture basis, what we see is beginning the year at the low end, moving higher until about mid-July, moving lower until about late October, and then, late September, and then the best part of the year for me this part of the year right over here. Remember, we talked about the green arrows and the red arrows down here in these boxes. These delineate specific periods of time, or I should say weeks, where the price moves in that given direction a majority of the time to the extent that it's statistically significant. In other words, I'm saying this pattern over here of all of these higher moves from October, November through December are not random events. They are predictable events. And as traders and investors, we want to deal with the predictable. Attempting to predict the unpredictable is a fool's game. However, using the predictable for our purposes is a wonderful idea. And that's what we do. So let me go a little bit further with this. And by the way, thank you to so many of you who've been very kind and sent me wonderful letters of encouragement and enjoyment and telling me that you're learning from this process. So let's focus here. As a trader, I'm interested in this 2-week period. Why? Because this 2-week period says prices tend to move higher and the probability is between 68 to 61% of higher moves. This is something I'm interested in. I'm interested in this period right over here. I'm interested in this 1 week over here, which is coming up, which has come up the last week of September. I'm interested in this move right over here. And when I say interested in, it's a euphemism for I'm interested in making money with it. But remember, as I've told you many times, if there's one thing that I can teach traders and investors, it is this. The big money is made in the big move. You need to have the big move. This is what I call a big move. Why? Because you'll notice that it encompasses practically 1/2 of the entire movement for the year. So here we are in October 3rd, to be specific, looking down the barrel of this very bullish gun. How do we take advantage of it? One way is to do a search, what I call a deep search, which we can do. And by the way, one more thing. I am not trying to sell you anything except an idea and a concept and a methodology. What you choose to do in the way of generating your seasonal trades is up to you. This seasonal trading program is not the only game in town. There are many others, and some of them, I dare say, provide much more information. But for me, the basic has worked the best. So what am I going to do? Last week, I proposed to you that we're going to go to this period of time right over here, beginning second week of October, ending at the end of the year. And we're going to focus and zoom in on this and try and find specific trades by date of entry. So we're taking this macroscopic picture and we're going down to the lower level to get real specific in terms of what we do. Please remember that what I do is set up, trigger, follow through. If you can take your trading methodology and over the big picture of history, determine what is the setup or pattern, how does that pattern trigger and create a trade, and what do we do with that trade after it's over? That's what it's all about. Now remember, I'm a pragmatist. I'm interested in pragmatic, workable solutions. I'm using cycles in this particular way, whereas other people will use cycles in their own way as well. The broad scope of cyclical analysis is that it is applicable to any market, any statistical data series in any time frame, assuming the cycles can be found. If anybody here read my article on the Japanese yen versus the US dollar cycles a few months ago in Cycles magazine, go back and take a look at it. See what happened. See how the setup and the trigger and the follow through worked together. So what I did last week was I started to compose a list. So let me do that. I'm going to go back to the search feature and say, show me how we can find specifics for these trades. So let me do that. One moment, please. And by the way, as far as I'm concerned, what we really want is specificity. The more specific the information, the clearer the information, the less likely we will be to make mistakes or use judgment. So we're going to go to seasonal trades right over here, like so, in stocks. And we're going to pull up the list that I made, or I should say that I started in our last session. So just bear with me for a moment, please. And here we go. My saved seasonals. And you will remember this. We saved our seasonals in US stocks folders, FSC. So there's no sense in doing the research if you're not going to save the results. So let's go to the FSC list and take a look at what we picked. Just bear with me. Here we go, FSC 24. That's the file that we made, and we're going to view it. So here's our file. And remember what I'm attempting to do here. I'm not attempting to be perfect. I'm not attempting to show you things that give you recommendations to make money. I'm giving you an educational experience here, which you may choose to accept or reject or even amplify upon and make it better, because the approach here is very basic. I went to the screen, and if you didn't see the last session, you should. And I picked stocks at random from the list and asked the question, show me stocks that have high probability of success, 75% or more winning, 4-to-1 win ratio, and a duration of less than 25 days. So let's take a look at what we got. We saved the first trade, 3M. And here, what I'm going to do is I'm going to organize this list by entry date, like so. Chronologically from the earliest date to the latest date. What is the wealth of information that we're getting from here? And what makes this different than what most traders do? What makes this different is we have facts. We have history. We have clarity. We do not have opinions. We do not have interpretation. We do not have analysis. We have fact. You could easily say to me, these statistics here are rendered useless because we have a very significant international geopolitical situation going on right now. In fact, we have several of them. And so the natural reaction of most individuals will be, it's not going to work this year. It can't possibly work this year. If you study these situations, as I have for many years, you will find that regardless of underlying fundamentals, they work. They're not perfect. After all, 79% accuracy is not 100% accuracy. What I'd like to do is show you some detail. So the first trade on our list is Alphabet Class A, which enters a long position October the 13th, gets out October the 14th. I'm sorry, October 17th, 4 days later, with a 3% stop and so forth. Look at the information. Think, please think. Does this list, this particular listing, give you all the information you need to make a trade or an investment? It tells you whether to buy or sell. It tells you whether to, let me get my arrow pointer. Just one moment, please. So make it a lot better. Here we go. So what is the information that's contained here? It gives you the name of the stock to trade, the symbol, long or short, the entry date on the close of trading that day, the exit date, the stop in percent, meaning if you buy a stock at $50 and there's a 5% stop, if it goes against you by 2.5% on a closing basis, you need to get out. It gives you the PL ratio, the total profits divided by the total losses, percentage winning, average profit, average loss, percent, and points. It tells you literally everything you want to know with one exception. And that exception is, will it work this year? We can't guarantee anything in that respect, obviously, but we do have ways of dealing with it by using a trigger. Remember the setup, trigger, follow-through paradigm that I gave you. There's a specific trader that we use, which I hope I will have time to get into today, but certainly if not, then tomorrow, then the next session. But the bottom line is all the information is here. The curious thing about traders and investors is this. They see these patterns, they see the vast amount of history that's involved here, and yet they say this time will be different. Let me show you some history here. So just hang in there for a moment, please. Let's look at some history. Let me get rid of the annotations here. So here's the history of this trade in Alphabet. It's only got 20 years of history, but they've certainly been 20 stellar years, as you can see from the performance statistics on the bottom of the screen. Not perfect. There have been 1, 2, 3, 4 losing trades, but certainly the curve in terms of equity has been heading higher. I would feel more comfortable with more history. So as I said before, while many traders and investors run away from history, I like to run toward history because that gives me my best probability of success. So if you're committed to the belief that history repeats, that's true not only in the historical events of time, but also in terms of prices. So let's do this. Let's go back just 1 moment, please, to our trade right over here. Let's look at a trade that has much more history. And by the way, when I say a trade, I mean specifically the trade right over here. Entry date, exit date, stop, etc. Is it possible to make these trades with options? Absolutely. In fact, in some cases, options would be preferred. And you notice they're relatively short-term trades, which means that an option will not lose much time value. So let's look at Cisco. Here we go. And we're going to look at the history of Cisco. And there's the history. So you'll notice 37 years of history, which is very impressive. And if we go down the list, we can look at some other information which may be relevant in your decision-making process. Here we go. And again, we see a positive equity curve. And let me give you a little bit of warning. If you're like most traders, and believe me, you don't want to be like most traders. That would be the worst thing you could do because most traders lose money. What you're going to look at is you're going to see the highest cumulative profit in the history of this trade. The natural instinct of most traders would be to say, it's been working too well. It's going to have a correction. It's not going to work this year. Don't do that. What you want to do is make your decision based on, can you afford the risk? And if it's a trade that's been right less than 80% of the time, in this case, 78% of the time, you want a trigger. I will teach you the timing trigger.
Jake, we have a statistical question actually. Jason is asking, would it make sense to also utilize the median for profit opposed to average? It looks like a few data points could skew the valuation.
That is true. It would make sense. And certainly, if you put on multiple positions, you can have multiple exit strategies based on the median profit, the percentage average profit, the percentage in points, and so forth. That's a very good suggestion. Remember, this is the first step in the process. So finding the pattern, which is what we're doing right now, is an excellent first step. If we find solid workable patterns, we can have intelligent exit strategies as well. Great question. Any others, Dan?
Not at the moment. I can supply a few at the end.
Okay, very good. So let's go back to the list. What we're going to be doing in the next few weeks is this. As each one of these seasonal patterns comes into play, we will show them in the session and ask the question, how did it turn out? What did we do? What should we have done? What could we have done? Did it work? If it didn't work, why didn't it work? And so forth. So we're going to be asking some very serious questions about the process. But remember, it's all about the process. If we use the right process, we'll get the right answers. Let's look at the next one, Berkshire Hathaway. And I want to reiterate, what does this mean? For this particular symbol, in fact, let me get my pointer back again. Just a moment, please. For this particular symbol right over here, it means buy on close October 27th. If the market is closed on the entry date, we buy on close the next business day. Exit on close November 18th. In the meantime, use a stop close only of 3%, which means this stock must close 3% lower than where you got in or the close of trading on the entry date. The PO ratio gives you an indication of how much it makes when it makes compared to how much it loses when it loses. Clearly, a higher PO ratio is preferable. 79.4% tells you the percentage of time it has fulfilled the condition of being profitable on the exit date without getting stopped out in between. The average profit in points, dollars, the average loss in points or dollars, the average profit in percent, the average loss in percent, and so forth. I like to see trades that have a larger profit percent than a smaller profit percent on the loss. In other words, when it's correct, it's making 5. When it's wrong, it's losing 3. So this is a very profitable ratio for me. So what else are we going to do with this information? Remember, anything with less than 80% requires a trigger. Why? Because if a pattern has been successful for many years, that doesn't mean it's going to be successful again this year. So I want another little boost of just a little bit of an insurance policy that it's likely to work. And that's what does it for me. At 80%, we don't require a trigger because you can't really very much improve on 80% probability. Remember this, most investors and traders are very happy if they can be right 50% of the time. That does not move the needle for me. I need much more. I'm not interested in 60%. I'm not interested in 64%. I'm interested in 65% or higher, unless we're looking at the weekly seasonal chart, in which case we can settle for less percentage accuracy. I'll explain this as time goes on. Let me erase this for just a moment. And let's go back to the list. So you say, well, wait a minute. This is not enough trading for me. I need more trades. No problem. Let me show you how we generate those trades. I'm going to go to seasonal trades like so. I'm going to find the stock trades like so. And I'm going to do a little search. I'm going to try and pick some that I didn't pick before. And by the way, the reason I picked these at random last week is I don't want to show any bias to any particular stock that I may be interested in from a fundamental point of view. So I'm going to just pick a few right over here, like so. And again, you can do them all. You can do some of them. You can do none of them if you so desire. But what I really want you to come away from with these meetings is 3 things. Number 1, there's a process for using cycles, whether they're seasonal cycles or long-term cycles. That process is finding a reliable, predictable cycle or seasonal. Number 2, once you've found that reliable seasonal cycle, develop a strategy for getting in and getting out and determining risk. Number 3, once you've got the methodology and the technology all straightened out as to what you're going to do, establish a first profit target. That first profit target is designed to get you out of danger. Once you're out of danger, the world is your oyster. Once you're out of danger, you can maximize the profit. In some of our advanced sessions later on in the year, or into next year, I'll be showing how to maximize profits as well. Let's go to the list and let's go to October, like so. Let's put in our search criteria. I want 75% win. I want a PO ratio of 4 or more. In other words, when I'm winning, I'm making 4 times as much as I'm losing when I'm losing. And I want to have a specific stop. Let's say I don't want to risk more than 5%. And I want to be in the trade a short-term duration, 25 days or less. Let's ask the question why. Why 75? 75% is way above and beyond what most traders can get. It shows the reliability of the cycle that we're looking for seasonally. PO ratio, we want to make sure it's worth our while to take the trade so that we're making more money when we're right than we're losing when we're wrong, because we know we will be wrong a certain percentage of the time. Risk. This is up to you. You can risk 5%, 2%, 3%. Remember this, the less you risk, the fewer trades you will have. And 25 days, we're catering here to our need to be quick traders, to take advantage of the move when it's happening rather than stay with it for a long period of time, because we define this as a seasonal, which means we need to make our profits within the year. Or if we put our trades on late in the year, we certainly need no more than a few months to establish our targets. Before we end today, I'm going to show you an unbelievable trade that will leave you thinking, if it has not already done so, as to what it is that causes these cycles to happen. So here's our search criteria. We do a search like so. And what do we get? We get a McDonald's trade. I'm not sure if the McDonald's trade is on our list, but let's look at it. Why did it give us so many trades? Easy. Please remember the computer is stupid. It's our slave until recently with AI. The computer will only give us what we ask it to do. So it says, searching the entire history of these stocks, McDonald's and Masco, these trades all fulfill the conditions that you asked for. Let's look at the first one, Masco. October 26th to October 31st, relatively short-term trade with some very high percentage accuracy. Very nice. Let's look at the history. Why do I look at the history? I look at the history for two reasons. Number one, I want to get that warm, fuzzy feeling that we've gone back and looked at it for a long time. Number two, I want to see growth. I'll show you what I mean by that. So here's the chart. I see that the cumulative profits grew nicely. They went into a period of stagnation, and then for the last 10 or 15 years, they've been growing nicely as well. I realize those are subjective terms that I'm using, but sometimes we do use subjective terms. If you don't like to do the warm fuzzy thing, which I do, you can go back to the trade, no problem, and say, I don't care about the warm fuzzy. I'm just going to do the trade. The statistics are very impressive. Excuse me. Let's go to McDonald's. Excuse me. McDonald's. It organized these trades on the basis of percentage accuracy. So you'll notice it put the highest accuracy McDonald's trades in the first position at 79%. And from that point, they all decline. But what if you were interested in this? Let me get my pointer. What if you were interested in this whopping 15-to-1 PO ratio? You would have to sacrifice a little bit of accuracy to get this trade, but nonetheless, these would be the statistics that apply relevant to that trade. One moment, please. I'm going to get a drink of water. Okay, we're back. So here we go. Here's the trade. So for my money, I'm willing to sacrifice a little bit of accuracy for a higher PO ratio. Either way, let's look at the performance history. Here we go. McDonald's going back 54 years. Now repeat, 54 years. And I want to ask you a question to ask yourself. Who else in this business, no matter what methodology they're using, is willing or even able to go back 54 years and look at the history? We do that because we love it. And here it is right over here. Very impressive. and certainly extremely impressive in the last few years. Don't make the mistake that so many traders make, which is to look at the chart and say, it can't happen again. It's gone too high. It's had massive acceleration. It's had parabolic growth. We don't need any of that stuff. It's all interpretive. This is all crystal clear. So what I'm going to do is this. I'm going to go back to my list right over here, and I'm going to add McDonald's, this particular trade, to my folder. Before I do that, I have to bring up my folder. So let's do that. Stocks filter. One moment. Let's go to our folder. Hang on a second, please. FSC. Right over here. I'm going to save this trade to our folder. So now the trade is in our folder. And let's do one more, and then we'll get into some details on timing. Let's go back to the search. Let's get rid of the red stuff, the clutter as I call it. Let's come down the list, and let's do this. Let's go to a broader based index, like, let me clear the selection, and come down to a broader based index, like maybe the Dow. I'm sorry, like the Dow would be a narrower index. Let's look at let's see what we have in the Russell. Just a moment. Here's the Russell. Let's see if we have enough history on the Russell. And we keep the same parameters. And by the way, if these parameters don't float your boat, as they say, you can put anything in here you want. If it's there, it's there. If it's not there, it's not there. We're not creating something. We're simply extracting parts of history in terms of patterns, which is what cycles is all about. So let's do a search. And we do have some Russell trades. And they begin, let's sort these chronologically. 29th, right over here, 28th. Let's look at the entry date. One moment, please. Here we go. So our first possible entry for the Russell trade would be late in the month, October 28th. And let's look at the history, like so. And we have 24 years of history. And let's look at the history individually, like so. Quite impressive. We'll see what happens. I want to reiterate. I'm going to save this trade to my list. And what I want to reiterate is this. I am not trying to tell you what's right for your account. I'm not trying to give you recommendations as to what to do. What I am showing you is a process that you can do on your own with this specific tool that you have, no matter how you find your seasonal trades. With the advent of AI being so powerful, you can certainly generate these trades very quickly on your own by asking AI the right questions or developing AI in the right way. So let's go back to the history, like so. And be patient with me. I'm trying to show you a process. Remember, this process that I'm showing you has been developed over the last 50 years. I started many years ago and perfected it slowly over time, which does not mean it's perfect, but it is valid and solid, and it conforms to a structure that most traders don't have. So I'm going to go to the Russell, like so. I'm going to save this first trade, and then I'm going to show you an alternative. So we're going to save this trade to our folder, like so. And as I said, we're going to come back here in October as these trades develop and show you the outcome of each one of them from start to finish. And remember, this is not a contest. It's not a demonstration of proving anything except the process. They could be right. They could all be wrong. We don't know ahead of time. One thing I neglected to show you is this. If I go here to the seasonal tab, like so, I can get some very valuable information. And let me explain to you what it is. So let's click on this tab and bring up the seasonal chart. And I'll show you what the information that it gives me. So check this out. Here is the big picture Russell chart. Let me bring the screen down a little bit. Okay, so here we go. This little sliver right over here is the period of time for the trade that I just showed you. The question is, what happens to the chart after the trade is over? And the answer is, it tends to go higher. So how is that information valuable to us? Very easy. It tells us that if this trade is a winning trade on the exit date, we can take some money off the table, but keep the balance of the trade with a trailing stop in order to maximize the profit because of the fact that the chart shows it continuing to go higher. Let's do one more thing. Go ahead, Dan.
Jake, in relation to the seasonal chart, we had a question from Anthony. Is there more risk buying at highs of a chart rather than at the lows using seasonality? And do the probabilities change when using the numbers?
No, in fact, it's the other way around. As the probabilities, as the buying at the higher numbers actually gives you better probability because you're buying into a trend that's already in process, if I understood the question correctly. Any other
Great.
question?
Not at the moment. Thanks, Jake.
Let me show you one more thing. We're going to go to seasonal trades and futures. One moment, please. And we're going to, let's do one more thing. One moment, please. Seasonal trades, futures, short term. And let's ask the question, for the month of October, are there any short-term trades based on cyclical seasonal behavior in the gold market? Because we know that gold's been going up like crazy and it's reached new all-time highs again, completely consistent with the cycles. But let's ask the question on a smaller basis. Any gold trades with 70% accuracy or more? Very easy question to ask. Let's see if it's an easy answer to get. And the computer says, no trades meet your criteria. So I'm going to go back and I'm going to ask another question. Is there anything in gold, even at less than 70%, between the range of 60% and 70%? Is there anything for October in gold? Let's make sure we've got the gold still checked off. Here we go. And let's do a search. Aha. October 11th to October the 13th. Very short-term trade. Some good probabilities here. We want to look at the percentages. As you can see, the percentages come in at less than 70%, which is up to you if you're interested in this. But for me, my minimum accepted number is 70%, preferably even 75. And there are so many seasonal patterns that you can find even at those percentages. Okay, any questions, Dan?
Anthony, thanks you for your questions. We do have another question. Does Jake ever trade future spreads?
Oh my God, that is a beautiful question. Let me show you something. This will absolutely blow you away. Future spreads right over here. I'm going to go to, I realize it may not be popular, but let's take a look at the lean hog market. I know that sounds a little funny, those of you who don't trade futures, but here's lean hogs. I'm going to ask a global question for the entire, and the answer to the question before is yes, I do trade spreads and I love them for various and sundry reasons. I'm going to ask the question, is there anything across the entire year in hog spreads, specifically buying one contract month, selling another contract month, that has been right a high percentage of the time? I'm just going to let the computer go on this and let it pick on its own. Do a search. And here it is. This is truly unbelievable. Not a recommendation, just a statement of fact. 89% of the time, this spread has worked. In other words, buying June hogs, selling April hogs, November the 24th, keeping it till April the 3rd, which is a long time for most people, but that has been right 88% of the time. And let me show you the history. Truly phenomenal. So the answer to the question is, do we trade spreads? The answer is hell yes. They're extremely cyclical. And we're looking here at 54 years of history. And let me show you the rest of it. And again, if you don't understand spreads, particularly in futures, you might want to make it your business to do so. Now we can make a little judgment here and say, in the last 10 years or so, there have been some losing trades that have been significant. However, if you like the growth curve showing at the bottom, that's certainly one that you could do. We can do one more thing to this before we run out of time. Watch this. We're going to go back to the tab, the previous tab. We're going to say, okay, I want to do a search on these spreads, but I never want to risk more than a certain amount of money. So let's go back here and put a stop in here. Let's say we're going to put a stop in here of 5%. What will it do? Well, it'll give us fewer trades and it will give us a stop and it should take away some of the erratic history. Let me show you what I mean. There's just so much to talk about. I wish I had another 6 hours to just barely graze the surface of this. Remember this, the proof of the pudding will be in the eating. I'm not saying that we're going to be successful with all these trades, but you will get to see the process. And if you understand the process, you will eventually get to the point where the process will be profitable for you, no matter what methodology you use, as long as it's clear and specific and rules-based. So Dan, I have time for some final questions.
Looks like we have no active questions at the moment, but we have thanks from the group. Yeah, Anthony, thanks for your answer. Smiles are good comments that what you've been showing here is similar to Alcoa AA already in bullish mode for the October to seasonal from previous FSA meeting.
Right. The Alcoa trade is truly phenomenal. We'll take a look at that next session. Thank you, everyone, for being here. And if you have any questions, please don't hesitate to write. And thank you so much for the foundations giving me the opportunity to do this. And again, as always, I apologize for the voice or lack thereof. Thank you, everyone.
All right, we are out.